Well, good morning, good evening, good afternoon, everyone. It's Monday, April 24th, 2023. It's just after 8 a.m. in New York, Washington, D.C., 2 p.m. in Paris, and 4 p.m. in Dubai, and 7 p.m. in Bangkok. This is a webinar for regulations and taxes for foreign real estate investors and buyers, hosted by FIABCI, the World Council of Experts. My name is Joshua Duncan. I'm Vice President. Dr. Sapon Pornchukchai is our President, along with Mr. Evan Bennett, Ivan Volkov, and Ms. Ava Gonzalez. For those who don't know, FIABCI has an over 71-year history. We're in 70 plus countries, 5 continents. We have 45 national and multinational chapters and encompass over 40 plus professions in the real estate industry. FIABCI provides access and opportunities for professionals gaining knowledge, sharing information, and conducting international business. We have lots of educational programs, and it's a great opportunity for people to join, expand your global influence, and build new opportunities and market yourself globally. We have 4 speakers today. Mr. Michael Hemming is president for FIABCI Germany. Mr. Antonio Campagnoli is president of FIABCI Italia. Mr. Ramon Riera is our world vice president-elect. And Mr. Yoshi Takita is from FIABCI Mongolia. To kick things off, we're going to have our current president, Ms. Susan Greenfield, say a few words about FIABCI, and I'll turn the floor over to Susan.
Well, thank you very much, Joshua. And I want to extend my greetings to all of you from New York. Thank you for the invitation to welcome you today. I would especially like to recognize Dr. Sopun and the World Council of Experts for organizing this webinar on regulations and taxes for foreign real estate buyers. So I wish to extend this appreciation not only to our members of our World Council of Experts, but also to all of those members who are listening to this webinar today. I think it's very important to recognize that the topics that we bring to our members are really timely and important. I've been a real estate professional for more than 45 years, and I work with many clients from abroad. And I've been fortunate to have the resources available to me to help me, but our industry changes all the time. And I think that it's important to recognize that we're not experts, really. None of us are experts. I never say I'm an expert. I always look for the information to help me to guide my clients. But before I talk and leave my platform and give it to all of you, I just want to tell you a little bit about how FIABCI started, because not very many people know the real story of FIABCI. After World War II in Paris, the Property Management Association, known as CNAB, held a national meeting. It was their first Congress in France in 1948, just after the war, and they came together to develop a plan to help with the Marshall Plan that was about to be signed to help rebuild Europe. The idea was to help keep the peace and to help people who were displaced or lost their property or really were facing rebuilding property that was destroyed, to help value what was there, help with valuation, and help to rebuild. Our professionals came together. They invited representatives from real estate associations from the United States, from Austria, Germany, and Belgium. This was the first international real estate congress ever held of its kind to come together, many different sectors, to help plan and create a plan to help keep the peace in Europe and assist with complexities of rebuilding Europe. This is how FIABCI was born. And in 1951, we were incorporated. Many other countries joined after that, but we are an umbrella organization of many different disciplines of real estate, coming together to help solve problems of the world. In 1952, the United Nations Social and Economic Council invited us to be the only non-governmental entity to be advisors to the UN, and we have enjoyed that status all these years. So I just want to say, FIABCI is more than just real estate brokers, real estate appraisers. We are architects, we're city planners, we're investors. We have multidisciplinary exchanges, shared knowledge and business practices over national, regional, and international levels. And I can go on and on about my love for FIABCI, but I'm going to turn the microphone back to our moderator, Joshua. If you have any questions, feel free to ask any one of the members who are sitting on this panel, because they all are experts too. Thank you.
Great, thanks, Susan. I think that's a good point. As we're not complete experts, as doctors are not complete experts and are always practicing our profession. So without further ado, we'll bring on Mr. Michael Hemming, who is president of FIABCI Germany, who has a brokerage company in Germany. They specialize in marketing and joining buyers and sellers and brokering your properties to getting the best possible prices in the shortest period of time. They help with assessments and bring you throughout the whole process, and are very transparent and very educational in the real estate background in Germany. And Michael, if you want to take the floor, do you need Dr. Salpon or anyone to present your PowerPoint?
Yes, if you give me the allowance to share my screen, and I can also show you the presentation.
We will share the screen for you, sir.
So, try to. No, it's not possible to share. Okay, then I read it. Okay, Germany first. Everybody can buy, so we have no restrictions about buying properties in Germany. Okay, here it is. Very special in Germany, and I think this is a great difference to other countries, is that we have a federal structure with 16 federal states. And every of these federal states, we have the law of the complete country, and then we have several laws, sub-laws, in every one from the federal states, and they are different to the others. The tax laws in Germany are the most extensive and complicated in the world. You will never see a country with have so complex tax laws. And the most of the written literature about tax is written in German. Never do anything without a professional tax advisor. This is the most important thing I can tell you. When you want to buy a property, please talk to your tax advisor and ask him about it. If you buy a small property, something like a holiday home, okay, that didn't matter. But if you buy an investment, then you need a very good tax advisor. And not every tax advisor is specialized in real estate, so that makes a big difference. So then we have the buying tax. On the buying tax, we have the transfer tax. This depends on the federal state where you live. So we have federal states, they have only 3.5% on the purchase price, and others, they have 7.5% on the purchase price. The purchase is only possible via a notary. You can't buy directly, you have to go to a notary. The cost of the notary, the land registry, the registration of a mortgage is approximately about 1 to 2%. It depends on the purchase price of the property and how big is your loan and something else. And so you can't say it's a definite price. It depends on the purchase price. Then you have the annual property tax. The property tax here a so-called standard tax value of the property is determined according to complicated calculation methods. This is very, very complicated because there's a system where you calculate this, or the tax government calculate this, and they are changing it also now because the laws say you have to change it, and so the government makes a new rule, and nobody knows how it will end at the end of the day. This value you then have is multiplied by the individual multiplier rate of the municipality in which the building is located. So this may be, in some areas it's 300%, in others it's 500%, which is the multiplication. The whole procedure is currently being redone, as I say, and the exact effects cannot be yet estimated. But the only thing that we can say, it's getting more expensive. Never get cheaper, every time gets more expensive with taxes. The next thing is we have the sales tax. It depends on whether the property was owner occupied or rented out as an investment. Let me first have a look at the owner occupied properties. As a rule, it is tax-free on sale as long as no more than 3 sales in 5 years. It's the so-called free property limit, but this is also very difficult, and sometimes it's with 2 sellings or with 1 selling, and otherwise it's with the free selling. So it depends on your business what you are. If you are more real estate related, then maybe it's with 1 selling you're in the commercial area. Otherwise, the tax office assumes then a commercial property trading, and this is very expensive. So you have an additional tax for minimum 15%, and also the benefit you get from your selling. So it's also very complicated. Then on the other side is the investment. Investment owned as a private property. So residential sale, you buy it on your private part. You can buy it private, or you can buy it in a company or in a foundation. The sale is usually tax-free if the property was bought private and owned for more than 10 years. But they want to make it stricter and reduce it to 5 years. And then, as you see above, no more than 3 sales in 5 years, but that depends. Otherwise, the profit, the difference between your book value, not your purchase price, because between your book value and your sales value is taxable. And the tax rate is up to 48%, depending on the profit you make. The bigger the profit, the higher the tax rate. But believe me, if you have an income for more than 60,000 euro, you're in the highest class with 48%. So it's a high tax country, Germany. Then on the other side, purchase via a company. This is the other possibility you can do. Then the profit from the difference between your book value and your sales value is every time taxable. And then you have 15% corporation tax, plus the solidarity surcharge, plus approximate 15% rate tax. It depends on the municipality. So, okay. So at the end, you have about a total from approximately 31%. The rate tax on the municipality, this is also, it changes a little in the area where you live. So at usual, approximately 31%, sometimes it's 30.5, sometimes it's 32, but it's about this. Larger investments are usually bought in a company in Germany. This is mostly done. But I think about larger investments, not when you buy an apartment for 500,000 euro or a small property for 1 million. This is not bought in a company, but you have above 1 million, then it makes sense to make the investment in a company. The capital gain tax, it's not about the real estate, it's on interest, tax on interest, dividends, gains from the sale of shares and funds. there you have to pay the 25% tax. Inheritance tax, okay. This is also, therefore, you can talk about 3 or 4 days and you don't know all of it. It's very complicated and they have changed it a lot and make it more and more stronger. Excuse me? A difference is made according to the family relationship. You must see it as a matrix. First, the family relationship to the testator and the size of the inheritance. The more closely the inheritance is related to the family, the higher is the tax-free amount and the lower is the tax rate. The larger the inheritance, the higher the tax. So tax class 1 has a tax allowance for the spouse for 500,000 and for the children, for each children, for 400,000. Grandchildren, 200,000. And the tax rate is from 7% for a smaller thing and up to 30% if you have the wealth is some millions, then you have to pay 30% of it. Then you have the tax class 2. There the allowance is for parents, siblings, nephews, about 20,000 euros. So you see the big difference. You are children or spouse, 400 or 500,000, and for parents, siblings, nephews, only 20,000. Makes a big difference. And the tax rate starts with 15% and then goes up to 43%. And then the tax class 3, these are all the others. If you give some foreigner, you give somebody is not related to your family, you give him something, then it's 20,000, and what is above 20,000, the tax rate is 30% up to 50%. So at the end, it might be that that half of your wealth is going to the government. And the perspective in Germany is we have now the new Building Energy Act with obligatory renovation of old buildings. This is a very strange thing because in the EU, with this new Building Energy Act, you have to renovate your building. They make an energy testing, and there are classes from A to A, B, C, D, E, and or bad, very bad. And so they say if your building is above E, for example, then you have to renovate it in the next 2 years when you change ownership. If your building is class C, then you have to renovate it in the next 5 years by changing ownership. And that will cost a lot. So for example, if you have a house for about smaller house in the outside area, about 200,000 euro, then you have to pay about, for this renovation, about 150,000 euro to bring it up to the state. And there's a lot of money, and many people don't big problems which will come in Europe about this program. The next thing is in Germany, it's called the Heizungshammer, the heating hammer. It's the prohibition of installing of oil or gas heating systems as starting in January 2024. You are no longer, this is what is now, the coalition say yes about it, and now it's in the German Bundestag. They discussed it now, and the population is very angry about it because it takes away the money from all the owners of the buildings, because you are no longer allowed to, if you have a havaree with your heating system, you are no longer allowed to build in a gas or oil heating system. Your system have to be 65% with renewable energy. And so they want to have that you build in a warm pump. But if you build in a warm pump in an older building, you know the warm pump have only 35 degrees and not 70 degrees, what you need in an older building. And so this costs a lot of energy, of electricity, and the installation of a warm pump costs about 40,000 euro, 40,000 to 60,000 euro, and of a gas heating system, 10 to 12,000 euro. So it's 4 or 5 times the price you have paid for a normal system. And so it's very strange now, because there are enormous costs on the real estate portfolio. And as an answer to the ecological questions of the time, we offer with our company the Free Home concept for the construction of energy self-sufficient houses, residential, commercial, and industry, and with the great advantage of warm inclusive rent, energy flat. And so you can build new houses or renovate houses with this system, with this ecological questions, and you have at the end a self-sufficient house and with low energy, and therefore we are offering the plan to do this. If you have any question about it, send me an email to welcome@myfreehome.com. And if you have any question, please start. Thank you.
Wonderful. Thank you, Michael. Are there any questions for Michael? Joe's, I see you, you're muted.
Yes, good afternoon. You can hear me?
Yes.
Oh,
Yeah.
thank you. Thank you for organizing this. Thank you, Michael, also for your explanation. Can I ask you a question about the German market right now?
Yes, please.
Because of all the regulations and all the rules, it's like similar like here in Belgium. It's a straight, and it will never end, I think.
Also EU.
But how are the sales market right now, residential in Germany, and the prices, are they getting lower, or are they stabilizing, or they are still rising?
It depends what you read. So it's really some of the specialists say the prices go down. Others say they are stable, and others, like today in the news, they say the prices will go up. I think you must see it from different parts, because first, our government say we need 400,000 apartments, new apartments per year. Others say we need 700,000, but they only build 260,000. So we have a huge demand, but on the other side, we have nothing on the market. So this is what is getting the prices higher. The developers in Germany stopped now producing new apartments. They stopped building. They only finish their buildings they have started, but they don't start new buildings. Nobody. And some of them also going bankrupt now. And so we have no new apartments in the market. We have, on the other side, the need of apartments. So I think the prices can't go down. They go down a little, but then stable or going up for the next time. The rent is going up because people have to rent, and you see in the social media, I have seen pictures in Berlin from an offer, and there were a queue for more than 100 meters where people standing for to visit this property, a small apartment. This is unbelievable, and this is not good for the market. On the other side, our interest rates from the EZB, they are going up. They are now about 4% for financing. And so this is that some people can't buy a new home, because in former times, or last 2 years ago, we have 1% and now 4%. So it's no longer affordable for many people. So they are out of the market. This is what we say, the prices go down. On the next side, this energy nonsense, that brings also a lot of costs and also make the market down. So we have something which drives the market and other things which kill the market. So at the end, we can't know it exactly, but on my opinion, stable, and next year it will go a little up.
Thank you. Very clear. Thank you very much.
Wonderful. Thanks, Michael. Any other questions? Feel free to unmute yourself if you have any other questions for Michael.
I would like to make a comment. Michael,
Yes.
this information was absolutely incredible and very, very, very helpful and informative. I kind of see a trend here, probably will continue across Europe, I suppose, because of the strength of the new movement. But I also wonder, the people in government that make these regulations, they don't really have an understanding of the technicalities involved in building, and who are the advisors that are suggesting these limitations. Here in the United States, we have many of our governments and legislators that are looking to impose restrictions on using gas stoves, for example, and coming up with these theories of harmful vapors that, if you cook with gas, can hurt people. I just wonder, how the direction we're going, and if it's really sustainable in this direction, or if we can be more balanced and recognize that if you only drive electric cars, and you don't have enough charging stations to facilitate the purpose. I mean, it's just, how can we help the world? I think it's our job as professionals to try and be more moderate and bring some sensibility to the situation. Maybe we need to, to try and reach out to the legislators more. I don't know, but this information you presented was very, very interesting. Can you share your presentation with all of us so that we have the information? Not only was it comprehensive, but very well put together. Thank you.
Thank you, Susan. I have sent the presentation to Dr. Sopon. So, Sopon, can you share it with all of them? Would be very nice.
Yes, I will share.
Thanks. And one thing, Susan, what I can say to this, the main problem is our politics who are in power, especially the green ones, they are not educated. They don't have any job. They go to school, go to the politics, and then they are talking nonsense. They haven't any economic mind. And our economy minister, you must see, the economy minister of the fourth biggest industry in the world, he wrote books for children. And now he is economy minister. He don't have any knowledge about it. And he ruled the country, and he makes only nonsense and deindustrialization. It's absolutely catastrophe what happened here.
Very impractical and not really taking into account reality. That's the sad thing. Yeah.
I have all the file of the speakers. We will share and put it in YouTube as well.
Wonderful. Thanks, Dr. Sopon.
Now the free home, I sent you also a file, and then you can share it also, Sopon. I will send it to you now via WhatsApp. Okay. Have we a second round at the end, because I'm waiting for an appointment and I have to go out between. Sorry.
That's okay. Yeah. Are there any more questions for Michael? He has a prior engagement, so he will be leaving early. If anyone has any other questions, please speak up now. No? Okay. All right, we'll bring on our next speaker. Our next speaker is Mr. Antonio Campagnoli. He's co-founder of Il Punto, and where he's responsible for doing due diligence and advisory work. He has over 20 years experience in property consultancy, acquisition, structuring, feasibility studies, transactional liability and insurance, and financial law. Graduated law school with honors from Bolt Hall Berkeley Law School. He's a member of RICS, the Royal Institution of Chartered Surveyors, and the Appraisal Institute, Italian Association of Consultants, Managers, and Real Estate Evaluators, Counselors of Real Estate, just to name a few. He's also current president of FIABCI Italy. And Antonio, we'll turn the floor over to you.
Thank you very much. Actually, I tried to do my best to do something as did the colleagues. So I will speak. I want to share my screen first of all, if I'm able. Wait a second. I want to share.
We share for you already.
It's okay. Sorry. Okay. Yeah, because I sent you a new document. It's not this one.
Okay, you share
I sent
yourself.
you, yeah, I sent you a document that is updated.
Okay. You can share now,
Sorry.
sir.
Yeah, but in any case, I will try to do some inputs about these issues. For example, the ownership in Europe is basically all the same as in Germany. Everybody can buy and sell. I tell you only what is the peculiarities. In Italy, we have a rules in the civil code that basically enable people that come from countries where Italian cannot buy to not buy. Basically, is a reciprocity rules. On a practice way, the most common problem we have with Swiss, basically because in Swiss we cannot buy residential property. So generally, when a Swiss person buy in Italy, they declare to use, for example, the seaside house for reasons to have an office and or not poor residential purposes. Please note that is not often enforced these rules for many kind of political reasons, but there is the rules. And for example, now for Russian or other countries, it's better to, there is a list of this kind of issues on the Ministry of Foreign Affairs in Italy. And so it's very important to check if the buyer can buy or there are some restrictions which enable him to buy in Italy. On the other side, our system is very open. We basically are based, as in Germany, on the the central role is the notary. He is the person that assists you to transfer the property. Another peculiar rules that are has been are in Italy is that the building has to be built according to the duly permit. This seems a kind of very easy rules to apply, but since the building are very old and the permits can be a list of permits that come from years and years, it's very important that you carry out a due diligence on the permit before to buy, and more of all, a check of the consistency and the status of the building today. What happened usually can happen that, for example, there is a new bathroom, a new window, and some of these kind of minority, like minor problems can be solved, some others no. And can be a big problem if you basically are stuck in a property that is not anymore selling, cannot be sold anymore on the market. Another issue is the taxes. Basically, there are two main rules. One, if you buy as company, is 20% of VAT and a little 120 euro of taxes. If you buy as a person, basically is 11%, no VAT. The main issue is that if you have VAT, you can basically discount the VAT because you are a business entity instead as a no business entity. You pay the 11% without is an extra cost. What happened usually in Italy is that you need to take in consideration also the renovation of the buildings. And as Michael said, there were before, also in Italy has been applied the EU rules about the energy consumption of the building. In this case, first of all, you need to have a certificate that declare what is the degree of energy consumption of the building. The best is A, the worst is G. And pay attention that everything that is below D in few years, in theory, cannot be anymore sold in the market. And there are a lot of allowances from the state in this period to increase, to help you to make some refurbishing of the building. There are some exceptions, but actually for the market of the Italian market, our big exception is they regards the historical building. Pay attention that the Italian market is mainly made by historical building, except the big town like Rome, Milan. Most of the building are older than 50 years. Some of them are 200-300 years old. So to be a historical building in Italy is not an exception, is basically the common rules. There is no title insurance as in US, but since 10 years time, first America and after other title insurance like Dual has entered in the market. So you can have specific risk covered as well as the normal good title. This kind of insurance are not expensive, and I tell you, you need to consider to eventually take one just to avoid any issues about the title and the permit. When you buy from another country, maybe the main problem is the finance part. It's not a legal problem, it's more a business matter. The bank usually does not like to finance people that they don't know. And for these reasons, basically, you need to start the process of the finance in advance, provide all the documents, especially your profile as a payer, much in advance. The process is much longer, and you need to take in consideration a higher price of the financing. Last but not least, there are some new new form of energy. Basically, Italy as a Germany try to improve the energy, the consumption, the consumption of the building. One side is to refurbish the building, making the building consume less, and the other side, the state is is give a lot of money to make your own solar panel on your building and or to participate in what we call energy the community in order to have the energy you consume product in the local market. Italy, as all Europe, has basically the same rules, and I told you what are the basically the specific rules that apply in Italy. I share a document to you that is much more completed. I don't know if you find it. I sent you by WhatsApp. It's about 25 pages of Q&A about Italian market. And did you find it?
We found your CV and the sheet that you just gave us.
Did you not find the document I sent to you?
No, sir.
I send you now, so you have. Now I resent.
Through WhatsApp, Dr. Sapon, you may be able to share it.
Oh, in the WhatsApp. No?
Yeah.
Oh.
Yes, it is today at 12:46 o'clock in our group, FIABCI Council of Experts. It is a link to www.il. Is that this?
Yeah, but this is the CV. I sent you the document with all the
To
Q&A.
invest in Italy.
Yes.
I will share
Exactly.
in the document later, and also we'll put this into the YouTube so that you can see.
Okay.
Soon.
Thank you. It's important that you have it. Okay.
Yes, sir.
Thank you very much. So I finished my presentation.
Wonderful. Thanks, Antonio. Any questions for Mr. Campagnoli? If you do, please unmute yourself. No one? Okay, well, we can move on to our next speaker, Mr. Ramon Riera. He has a law degree and also a master's in real estate from the University of Barcelona. He's the founder and owner of Eurofincas, where they specialize in real estate law, property management, brokerage, and appraisals. He has over 30 years of his career working in the development of Spanish real estate sector and its internationalization. And he's our current vice president-elect for FIABCI International. And Ramon, I'll turn the floor over to you.
Okay, thank you. One moment. Okay.
Hey, share screen.
Sí, sí.
Sí, sí.
Okay.
No, compartir pantalla. Ahí estamos bien.
One moment. Okay.
¿Y ahora?
This is your screen, sir.
One moment, please. That's okay. Thank you very much. Good afternoon from Barcelona. First of all, I would like to thank you, Dr. Sopon and his committee of experts for their invitation to take part of this webinar. I also want to say hello to the rest of the speakers and all participants, and especially my dear President, Susan Greenfield. During my presentation, I intended to provide you with a brief explanation of what fees and taxes have to be paid by foreigners when selling or buying properties in Spain. I would like to enhance that Spain is the second country in the world in terms of tourism, only after the US. It is one of the countries with the largest number of real estate transactions. These are mainly carried out along the Mediterranean coast in the Balearic Island and the Canary Island. Madrid is one of the main markets for Latin America customers. If anyone here is interested in getting the full report on this matter, I will be very happy to send it. Just let me know. Now I am starting my speech. I will be using some slides which I think will be helpful and explanatory. Regulations, taxes for foreign real estate buyers and owners in Spain. In Spain, it's more easy, the taxes, not than that Germany and other countries in Europe. In 2022, there were 89,000 residential real estate transactions in Spain. This is an increase of 38% compared to 2021. The 14% of the all transactions, more or less 600,000 of these transactions were to foreign buyers. Of this, 47 were to non-residents. 161 golden visa were used in 2022. A non-resident is considered a person who spends less than 183 days in any calendar year in Spain. The question of taxes on the purchase of property is new build or resale. A non-resident has to pay VAT at currently 10% on residential and 21% on non-residential property on the purchase of new build properties. In the case of resale properties, you'll have to pay the ITP and AGTD at the rate in force in each region, between 4 and 10%. Currently, in Catalonia, it is 10% if the value of the property does not exceed 1 million euros. If it is higher, the value over 1 million is taxed at 11%. In terms of property purchase taxes, a non-resident pays the same as a resident, the same of the locals, no difference. Cost of notary's registration of a mortgage depends on the purchase price, approximately 2%, more or less. Taxes on the property ownership. A non-resident owner of a property in Spain must pay the annual EV property tax according to the cadastral value of the property and the rates set by the corresponding local council. This is the same as for residents. Non-residents will also have to pay an additional property tax if they own property purchased for over 700,000 euros. The tax is due on the value over the 700,000 euros. This property tax for non-residents will accrue on December 31st of each year and will affect the assets of which it is the holder owns on that date. Consequently, this tax is not due if, for example, a person dies on a day other than December 31st. The tax is not due in that year. Taxes on the property ownership. Furthermore, the non-resident must be taxed non-residence income tax, declaring either the income obtained by letting the property in question or by declaring zero income in the event of not letting the property. In the case of declaring zero income, 2% of the cadastral value of the property will be considered income for this concept if it is not recently updated, or 1% of the same cadastral value if it is up to date. Income, either by implied or by letting, will be taxed at a rate that varies depending on the tax residence of the non-residents in Spain. residents of the US, Iceland, Norway, and from 11 July 2021, legislation are taxed at 90%. Taxpayers resident in the other countries are taxed at 25%. Taxes liable on selling a property. The non-resident vendor of a property has 3 months from the date of sale to submit the corresponding year-end declaration, declaring the capital gain or loss that has been made on the sale transfer. If there has been a capital gain, it will be taxed at 90%. In the act of sale transaction, the buyer of a property from a non-resident vendor must retain 3% of the price to pay directly to the tax office, which will be deducted from the amount that the vendor enters in their year-end declaration. If there has been a capital loss, the non-resident tax-paying vendor may request the return of the 3% the buyer withheld in this declaration. Local capital gains tax. The law that regulates this tax is the local finance law, and in general, the vendor must pay the local capital gains tax. There is an exception if the vendor is a non-resident, and the obligation to pay falls on the buyer as a substitute taxable person. However, it is very common in this type of sale with a non-resident vendor for the parties to agree on calculating the amount of tax due and that the buyer deducts this amount from the price paid to the vendor. Local capital gains tax. A non-resident who acquires any property located in Spain as an inheritance or bequest must be taxed in inheritance tax. This is only on the value of those assets located in Spain. The region where most of the assets are located usually determines where the tax is collected and at which rate. The rate of this tax varies greatly according to the region. In principle, there are not further property taxes relevant to the non-residents and residents. This is my presentation. If you have any questions, thank you very much.
Thanks, Ramon. Any questions for Ramon? Anyone? Going once, going twice? Okay, we'll bring up, thank you very much, Ramon, appreciate that. Okay, we will bring up our next speaker, Yoshinori Takita. Has over 20 years experience, a strong passion for global real estate, has attended many international business trips and trade missions, including countries such as in Manila, Philippines, and India, Osaka, Japan, Hanoi, Vietnam, Phnom Penh, Cambodia, France, Barcelona, Spain, and Bangkok, Thailand, just to name a few. He is currently a licensed real estate agent in New York. However, he was NAR's president liaison to Mongolia in 2017 and 2018. He is NAR's chair for CIPS, the Certified International Property Specialist Advisory Board in 2022, and global ambassador to Vietnam, Cambodia, and Indonesia to represent the U.S. In 22 and currently in 2023. Without further ado, Yoshi, I will turn it over to you.
Yes, thank you very much for my introduction. And again, my name is Yoshi, and I'm a member of FIABCI Mongolia. I'm a founding member there for 2019, and I practice real estate in New York for past 20 years. And Dr. Sopon, thank you very much for inviting me to share my information. Okay, so that this information has been prepared for information purpose only, so that it doesn't intend to provide and should not be relied on the tax, legal, or accounting advice. And if you have any issues, you should consult your own tax or legal or accounting advice before engaging in any transactions. I'm going to cover these 6 elements: buying tax, annual property tax, sales tax, capital gain, inheritance tax, and special tax, if any. Buying tax. Again, I reside and work in New York City areas. And the United States, we have 50 states and a few territories, and each state have different regulations and tax rates. So I'm speaking from my New York City tax information. So currently there's no buying tax, but there's a mansion tax and mortgage recording tax in New York, state of New York and New York City. And I just put an example. If the purchase price of $1.5 million, and if you put down 20%, and if you're buying a condominiums, it goes like this for all the closing cost list. And on the red chart on the right, there's a mansion tax rate. They calculate your mansion tax. So the purchase price is 1%, of the. So if the $1 million of purchase price, the mansion tax is 1%. If it's 2 million, 1.25, and this escalates all the rates, goes up to 25 million for 3.0 mansion tax. And then in addition to that, there's a mortgage recording tax. If you finance to purchase your properties, there's another additional mortgage recording tax. And in the lower right side chart, that's the tax rates. It's differ from the price purchase point, but normally it's 1.925% of loan amount. Again, the closing cost is go up to a purchase price of about 3.717%. That's the rough estimate you expect to pay at the closing table. And if this is new constructions, developer expect you to pay, the seller's transfer tax and another 1.425%, and New York State transfer tax is another 0.4%. And they expect you to pay a sponsored seller's attorney fee for roughly $3,000. So the total closing cost is roughly about 5.742%. That's the rough closing cost of buying a property in new construction property in New York City. Next one, annual property tax. So in the United States, each county is calculated differently. And I'm speaking of New York City. New York City, property tax is assessed by tax assessor, County of New York. And its calculation is very complicated. And this is the tax rate. And roughly it's about 1 and 1.5% of a property value. But it's go by the assessed value of go by the calculated by this percentage. This is the case study. I can share this slide later. So if you are into it, you can calculate yourself. And there's a calculator for the property tax. You have to go to a New York City government site. They calculate it for you, your estimate tax bill. And sales tax. there's no sales tax for the buying properties in New York City, but there's a so-called a transfer tax, and the transfer tax is normally paid by seller, but it's not. It's negotiable. Sometimes paid by us, by the buyer. It all depends. But if you're purchasing a 1.5 million properties and transfer tax is 1.425%, and then that's a New York City tax, and New York State tax another 0.4%. And it's go up to a total of 1.825%. So if you're buying for a property worth $1.5 million, you are going to pay for $27,375. And this is a very high closing cost compared to any other states. Next one, capital gain tax. So there are different capital gain taxes, and I'm going to go over personal home exclusion, federal, state, and local city capital gain taxes. So the personal residence exclusion, section 121 exclusion, IRS code. If you are single and filing your tax by yourself, you can deduct first $250,000 from a capital gain tax. You don't have to pay tax if under the 250,000 capital gain. And if you file tax jointly, then you can deduct up to $500,000. And if it's second home, vacation home, you can only stay like 14 days past for 12 months. You qualify for personal residence. Right? That's another exclusion for the capital gain tax for personal home use. But if it's investment, this is the personal residence home exclusion. Little more details. So to qualify for that, you have to live 2 years for past 5 years. So 5 out of 2 years, you have to live there, then you qualify for these deductions. And if it's investment properties, there's a way to defer capital gain tax called 1031 exchange or like kind exchange. It have to be like a like kind of exchange, and meaning after you sell your properties, and you have to purchase replacement properties in within 180 days, then you qualify, and you have to go through a qualified intermediary company to assist these transactions. And the next one, inheriting tax. And there's no inheriting tax for properties in New York. So you can receive your property from your heirs, your family members, your parents, and you don't need to pay any inheriting tax. And special tax, if any. And in the US, we have the tax called a FLAPTA. And many people don't know, but this is very important. You should know. So FLAPTA stands for Foreign Investment Real Property Tax Act. And what it is if seller is foreign national, and don't live in United States, and then haven't filed any tax in the past, the US government want to capture their capital gain tax or other income tax if they own some. So the buyer is responsible for collecting and putting aside on behalf of a seller. So you have to, the buyer have to keep all the withholding tax. If you don't, and you are liable for this amount. And so the seller have to be a foreign national. And then typically closing agent is responsible and disbursing a closing fund, handle this on behalf of the buyer. And this is another exceptions. So if property value is less than 300,000, and then you're not you don't have to withhold the withholding tax. And if a purchase price is between 300,000 to $1 million, and you have to withhold 10%, and if it's more, you have to withhold 15% of a purchase price. And there's just go over like this is the exceptions. And I just found out closing cost calculator for New York City property purchase. You can scan the QR code, and then you can see the calculator to see when you're buying a property. So it's very useful to estimate your closing cost. And well, this concludes my presentation. Thank you very much for having me here. Thank you, Dr. Sopon.
Wonderful. Thanks, Yoshi. That was wonderful. Is any questions for Yoshi?
May I?
Yoshi, I'm sorry. Yoshi, can you put your your previous slide
okay.
with the calculator
Okay.
on so people can scan that?
Oh, sure. Let me go back.
So may I make a comment,
Please.
please? As a New York real estate broker for almost 50
Hi,
years.
Susan. How are
Hello,
you, Susan?
Yoshi. I just want to point out that we are real estate brokers. We are not tax attorneys. So
Right.
it's really important as when advising a buyer from abroad, or even one that maybe has a green card or residency status here, that you are advised by a tax attorney on all of these issues, because they vary, and the types of housing that one might be transferring also varies, like a condominium or an individual property or a cooperative, because in a cooperative, you cannot inherit a co-op.
Right.
Apartment, you inherit the shares and then have to qualify to actually own it, and go through the process of purchase again. So everything varies. It's complicated in New York City and New York State. There is a state imposed tax for purchase. It's called the mansion tax. All buyers have to pay that. Basically, it varies according to the price of the property, but in any case, a tax attorney really should be advisor. Always consult with one, okay? We just present the facts as they appear in writing, but there are always various circumstances that require someone to be advised by a tax attorney. Very important. That's all.
Yes, thank you, Susan. It's so true. Yes, yeah. Please consult with your own attorney and the tax advisor.
Always in New York.
So complicated.
It is very complicated. FIRPTA is another issue that is national. But when it comes to New York City and New York State, there are two different variables. If you're buying in New York City, you have an additional tax to pay for transfer taxes, and they are always borne by the seller, except in the case of new construction. And then sometimes it's passed along to the buyer, but that's negotiable, as Yoshi said, but only in the case of new construction. When you're dealing with a resale of an individual buyer to an individual seller, the seller always is responsible for the transfer tax of the property. That's his tax on transferring the property to a new buyer. But in the case of new construction, it's entirely different. The developers try to pass that along. It is part of the closing costs, and it's negotiable. And that's all I have to say. I just want to clarify that because it's really important to recognize that there are many differences, and you really need the complication defined by a tax attorney. That's all.
Great, thanks.
Thank you,
That's-
Susan.
yeah, very good points. And Yoshi, really appreciate the overview of all that. Any other questions for Yoshi or just in general?
Hello. Hello.
Yes, go ahead.
May I have this question? Okay, I'm Farah from Malaysia. I have a very general question. I'm a layman, but I just want to know what are the factors that you consider if you want to buy a hotel in Orlando, and what is the rate for FIRPTA, FIRPTA, for buying properties in Orlando, Florida, and what's the transfer tax like? Thank you.
Again, that specific question, you have to consult with your own tax attorney or your attorney. And according to the rates, it's a 15% of the withholding. And other than that, you have to consult with your own attorney.
Thank you so much.
Again, state laws vary. State laws do vary. But the FIRPTA tax is a tax across the United States imposed by our government. And the withholding of that small portion is withheld by the buyer. So you really need a good attorney to help you, because they will probably withhold it and keep it in an escrow account and make sure that the taxes are paid to the government on behalf of the seller, so that you're not responsible as a buyer for those taxes, but you do become responsible. And so does the transfer agent. That would be the broker or the attorney. So to be honest, they are very careful about meeting the law requirement in order to make sure that no one but the seller is actually going to be liable. Okay?
Thank you so much, Susan. Thank you.
Great point. Any other questions or comments? Cool. Well, I want to thank our speakers. Thank you, Susan Greenfield, our president of FIABCI International, Mr. Michael Hemming, president of FIABCI Germany, Mr. Antonio Campagnoli, president of FIABCI Italia, and Mr. Ramon Riera, our hailing vice president-elect from Spain. Let's see, Dr. Salpon is our president for the World Council. This has been a presentation by FIABCI International, which is subject to any disclaimers or terms that we've discussed herein. Dr. Salpon, would you like to have any closing comments and maybe let everyone know where they can find the materials online?
Yeah, thank you. Just shortly, thanks, Madam President, Madam Susan Greenfield, and all our speakers and our great moderators. I just want to inform you that the 4 files of the speakers are now in our chat already, so you can download it as you wish. And afterwards, I will send later and also put this into YouTube so that you can go back to see it as well. Thank you very much. So the floor is back to you, Mr. Joshua.
Thanks you, Dr. Salpon. If there aren't any further comments, I think we can wrap this up. Thanks everyone for watching and everyone participating. Again, I'm Joshua Duncan, Vice President of the World Council of Experts. And if you have any questions or comments, feel free to reach out to any of us, and we'd be more than happy to discuss anything further with you.
Thank you. Bye-bye.
Bye. Thanks, everyone.
Bye-bye.